So thank you everyone for joining. As a recap, some people might hop on a little bit. This is being recorded. It'll be broadcasted on YouTube, Instagram, all that fun stuff. My name is Rick Albert. I'm a Los Angeles broker with Lamerica Real Estate, as well as a two-time house hacker here in Los Angeles, an investor. I also manage a Facebook group called Los Angeles / SoCal Landlords. So we have about over 100 members. If you own property, if you own rentals, feel free to join. We talk about what's going on, help each other out, that sort of fun stuff. We actually recently just did a private interview with an attorney. So it was a lot of fun. And today we have Mr. Jonathan Kim of Guaranteed Rate. I'll let you do your own introduction because you do it better than I do. So go for it.
Just working out of Calabasas as part of a team. We close, a great deal of loans. We just passed 100 million ourselves over here, and it's just
that's
still
just your
rocking.
Team.
Yes, our team. Yes.
Congratulations.
So, I appreciate that. Thank you. Yeah, it's been nuts. It's been a roller coaster.
It's been one of those years, hasn't it?
It has been. It definitely has. But yeah, I mean, it's a blessing in disguise. But yeah, just doing mortgage loans, 4 units or below, investment, second homes or primaries, refinances, cash out rate terms, or purchases. So that's what's
Fantastic.
going on. Yeah.
So yeah, John and I here about once a quarter, we talk about what's going on the mortgage side, what's going on the sales side. If people decide to join, they're happy to ask questions in the chat. So why don't we go ahead, just jump right into it. So I'll start with asking the questions. John, what's the latest with interest rates?
So rates are still holding steady. They've been holding steady for 2 months now straight. I think they're expected to stay steady as well. The mortgage news that just happened today was basically Europe is, Spain is seeing a second wave hit type of thing. Some countries are going back to lockdowns, which is negatively impacting, the economic outlook in the United States. So it's what happens is when the economy starts looking a little more bleak, the rates stay low. So in terms of buying, it's good news, even though it's really bad news overall. Nobody's wishing for this to happen, but yeah, rates are expected to stay steady, and some loan programs have definitely opened since the last quarter, and you have more options now as banks are kind of loosening their restrictions as well.
So why does that negatively, or how does what's happening in Europe affect our interest rate?
Well, so what happens over, in Europe and the rest of the world when, the rest of the world catches a cold or catches the flu, the United States will catch a cold. So, we're a major economy, in the world. We're a little more insulated than most countries are. But yeah, the overall economic activity of the world will affect us in the United States. Not as much as maybe, what's going on in Germany versus Spain would affect one another, but they're definitely interrelated. So, because businesses are interrelated.
Sure.
So as the economy outlook is worse, people want to, are maybe spending less money. Maybe jobs are kind of at stake. It's the Fed's job to ensure that money can still move, and making money move will require it to be cheap to move around. So that's why the Fed kind of has really, stepped in and prevented an economic crisis, between first and second quarter to ensure that the economy just doesn't come to a grinding halt, which we were at risk of,
For sure.
a little while back, yeah, because there was just no more money to lend. So the Fed has definitely stepped in, has done a fantastic job keeping the rates low, and then keeping the money moving through the system. So it's kind of like a river, if the river stops flowing, then we got a problem. But
Right.
as long as the river keeps flowing, the economy will be fine.
And that makes sense, because even if businesses outside of the U.S. are having problems, Samsung, right? If they have problems, then we have problems because we sell Samsung phones.
For sure.
Or car manufacturers or whatever. So it's we can no longer just look at just how the U.S. is doing. We do have to look at everything from a global scale, especially being in Los Angeles. because even on the real estate side, we have buyers and sellers that are not from LA.
Absolutely. Yeah. Everything's so interconnected nowadays. E-commerce is just, the way things are going. Like you said, like I used to work in aerospace for a little while too, and we were buying parts from Israel. We were buying
Hmm.
parts, from Japan, things like that, processors, things like that. So everything's interconnected. Like if you ever to go like on a Boeing airplane, those are coming from all countries across the world. It's
Well,
nuts.
I remember when we thought our fridge died, we figured out it was just a thing with the panel. But like we called a couple places, we checked out a couple, and it's like 6 to 8 weeks to get a standard fridge because everything was at a halt all over the world. I'm like, I just
Exactly.
want a fridge. I don't ask for much. I'm not asking for the fanciest one. But yeah, no, that makes sense. So switching gears then to what's happening here locally, US, and if you happen to know for LA, like what's going on with forbearances? I mean, I've heard they're going to extend it again, but I don't know if that's true or not.
Yeah, I mean, here's the thing is that the forbearance thing is we find a lot of the more credit reports we pull, the more we see they're in forbearance or
Hmm.
mortgages that are currently, especially for refinances. And to be honest with you, the effect of it isn't as nearly as big as I thought it would be,
Mm.
because it's the rules are pretty easy. You got to just bring it current is really what the key is, and you don't have to have if you have missed payments, that introduces a level of complexity as to whether or not a loan could go through. But if you're in forbearance, but you made on-time payments, you have no missed payments on your credit report, it's super easy to get it back current, and I haven't ran into a borrower who really had the issue where they couldn't make it current if they wanted to.
Hmm.
Now, obviously, I see a small fraction of what the rest of the world sees. So maybe maybe in Iowa that might not be the case, but
Sure.
certainly here, like what the applications we see, forbearance hasn't really been as big of an issue as we thought it would be.
Well, I think also because people have equity in their homes,
For sure.
right? Like
Yeah.
I'm representing a buyer right now, um, and the sellers worked for one of the big entertainment companies. They got furloughed, so they went into forbearance, and they still haven't gotten their jobs back. So that's why they're selling,
Right. Right.
right? So it's like they don't have to bring it current; they just got to sell.
And I would say too, the thing that's kind of local to Los Angeles that I think maybe the rest of the country isn't feeling is the people who are kind of get hit the hardest are self-employed people. But not only is self-employed people hit the hardest, but entertainment people who are self-employed, which is pretty much all of entertainment,
Right. A lot of them are independent contractors.
independent contractors, exactly. And the rule is right now is you have to have cash flow. So, proving that it's kind of like because it's kind of like real estate agents, right? If you gather the latest 2 months of bank statements, you might not see a check because they didn't sell something, you know,
Hmm.
two sales in 2 months, which
Right.
is completely normal.
Sure.
Same thing with entertainment people. They have jobs, they have gigs, they come on and they come off, and it takes them a while to get another job lined up. So that cash flow analysis that it's been introduced has definitely put a stringent, we have to do a lot of analysis now in terms of, hey, what is this, payment? Is this business related or is this personal? And they're like, oh no, it's a Target credit card or something like that. Okay, great. So this large deposit of $6,000, what is that? Oh, that's the gig we closed up the other day or the contract that we signed. Okay, so I can count that as income. So we will literally have to go through line by line of the bank statements right now for self-employed people to ensure that cash flow is readily available.
Got it. Are there, because you bring up an interesting point. It's like, well, if I'm a small business owner, or let's take someone in the entertainment industry, they just finished with one show, right?
Exactly.
And I know a lot of shows have ended because of COVID, like they ended early, the seasons.
Exactly.
Um, so now it's picking up again. So how do you, from a loan perspective, how do you qualify them? Because it's like, well, what if that show gets canceled?
Yeah, so us as lenders, any good lender, what they're going to want to try to do is tell you, hey, you're pre-approved up to 650, 700, or
Hmm.
whatever it may be, upon the following conditions. So, I've issued pre-approval letters and said, hey, you're pre-approved, but you have to be on the job from the time escrow starts to to the time escrow ends. So I told them, right now, if you were to try to get the loan today, it probably wouldn't go through because we can't prove the cash flow. We can't prove you're on the job and earning an income at the moment.
Hmm.
So when this crisis first started out, that was a real big problem for the entertainment people.
Oh,
Eh,
sure.
Yeah, but now because they're kind of coming back on the job, they can continue with the loan that they were pre-approved for, or the refinance that they had to put on pause for a little while until they could get a gig going.
Got it. That makes sense. Are there any like loan programs that are coming back that we didn't have before, anything like that?
Yeah, for sure, for sure. I mean, I'm not gonna lie, like bank statement loans they're back.
Can
That's
you kind of go
good.
into what those are?
Oh, right. Okay. So self-employed people, it's only for self-employed people, where they write off everything on their tax returns because that's what CPAs do.
Right. They want to
They
pay as
try
little taxes as possible.
exactly. They find all the loopholes, in the tax code to reduce the amount of income that they are showing,
Hmm.
which is completely legal, completely fine. But on paper, on the tax returns, it shows that they don't make much income. So an alternative loan program would be bank statement loans, where we literally just do cash flow analysis. It's that same stringent requirement we have for regular loans now due to COVID. We do it across 12 months or 24 months of bank statements, line by line, adding and subtracting business income versus business expenses, and whatever that average comes out to be is how they qualify for a loan. So it's not a conventional loan. It's kind of
Hmm.
a semi, let's get around the normal ways of getting a loan. The rates won't be great, but that is an option. So,
What would be like a rate difference, right? So if someone can get 3% now, would it
oh
be
yeah,
what would it be for like statement?
it'd be high. It'd be very high. It's
Interesting.
probably higher than five,
Oh, wow.
5.5 to maybe even six, around those. Because even though those loan programs are still open, there's still plenty of risk due to COVID. So, obviously the riskier loan programs that you go into, the rates aren't going to be terribly great.
Sure.
So that's why, like, for example, like when COVID first started, everybody was looking at FHA loan, foreclosures, uh,
Mm,
because FHA typically has a pool of people who may not have enough down payment. They put as little down as possible at 3.5%, or their FICO score is a little bit lower that they can't get a conventional loan. So even though those rates are lower, it usually commands higher mortgage insurance. So if there was a group of loans out there that you want to see who's going to forfeit maybe first,
hmm.
maybe the hard money, then bank statement loans, then FHA, and probably last conventional.
Got it. Do you see foreclosures on the horizon?
I was actually just reading up the news a little bit. It's they say like 7% of homes nationwide are in foreclosure, and there's differing articles about what may happen in the future. It doesn't seem like uh there is going to be like a major wave like '08
Yeah.
is going to happen, right? Um, I'll be honest with you, like the amount of the amount of digging that we're required to do to make sure that somebody has the ability to pay is quite extensive,
Right.
which is why escrows take a long time. They take 30 days for a purchase because there's a lot of checks that are being done to ensure that the ability to pay is there and that we follow requirements by law. So, um, you know, I can't imagine it would be anything close to that. I mean, this is just my opinion.
Sure. Yeah. No,
Yeah,
of
I'm
course.
just a loan officer in Calabasas, right? So take it with a grain of salt. But yeah, it doesn't seem like it's going to be a massive wave. It might be an uptick, more than normal, but should be expected.
Yeah. I mean, from what I'm seeing, I mean, when this whole thing first started, was it over 14 million Americans were in forbearance? We're now down, I have the stats somewhere. We're like down to like below 4 million. I mean, that's a big jump. I mean, just last quarter, back in May, I think we we're at like 10 million, right? So we're seeing a decline. So either people are paying, they're catching up, or frankly, they're just selling, right? Because the majority of Americans in the United States right now have equity. So it's like,
Right.
why should I put a foreclosure on my record when I can just sell it?
Right, and then they're also getting, that government relief through the forbearance programs. Nobody wants to kick people out of their homes due to
Right.
COVID.
It's a tough one.
That's a tough one, right?
Yeah.
That's not a real reason
Yeah.
to do that, because eventually this will be past us and people will have their jobs back. And yeah, I don't think what the government's done to ensure every measure is taken for that. I think it's been a good job. I mean,
Yeah.
you can see it by the numbers, like you're saying,
Yeah.
that they're doing everything they can to make sure that we have a stable economy.
Right. No, I mean, my hunch, again, just a lonely realtor in LA. Like we're gonna see more inventory. Like that just makes sense to me because some of those people that went into forbearance, they may not get their jobs back, or they may get a lower paying job, whatever it may be. But because they have equity, they're just gonna sell. But it's not like everyone's gonna sell on the same day,
Right.
right? So some people might start, if they start thinking ahead, they might be like, okay, maybe I'll list my place today, right here on October 15th. Or some might say, all right, I'm going to wait till the beginning of the year. Some might wait till later on. Then some people might have their come to Jesus moment, like, okay, I got to do this,
Yeah.
right? But like, I mean, I've seen a couple short sales, but not really that many, just because there's, values have gone up.
Right. You're absolutely right. And, in the microcosm, I think, everybody suffers this is the microcosm of what you see, like what's in front of you
Hmm.
versus what's in front of everybody else in the nation. Like
Right,
that's the hard part, right? Is, how are places like South Bend, Indiana faring versus
right. That's a good
LA,
point.
I think you'll have a lot of differences maybe geographically.
And that makes sense because if you take somewhere like, you know, Oklahoma, right? No, nothing wrong with Oklahoma. I've been there. But it's like, you get a home for 150 grand. The type of people, if you work, 15, 20 bucks an hour, you could probably afford a home, I would imagine, somewhere in that range. Obviously, depends how much you put down. Like that's not happening here in LA.
Right.
So,
Exactly.
and those people might get more affected by COVID, right? Those are the restaurant workers, the waiters, the waitresses, all that. So, to your point, and there's a lot of data that's suggesting that we're going to see more homes come to the market, but it would be interesting to see exactly where. And my hunch is you're going to see it more in kind of the middle America than you would necessarily on the coast because of the price points.
And what's really strange, this is kind of off topic, but just kind of just trivia. Like on the East Coast, I feel like a lot of people make their money just very standard ways through W-2s, and they're
Hmm.
employed by very large businesses.
Hmm.
In California, people make their money very differently. They
Interesting.
a lot more self-employed. The loans here are more complicated, I feel like.
Hmm.
Qualifying people is a lot more complicated, especially after COVID because of this cash flow analysis and profit and loss statements. Before, on a conventional loan, you didn't have to get a profit and loss statement for a self-employed person if their loan amount was normal.
Hmm.
But now you do, and
Hmm.
they all three have to match. So you have to match the tax returns, have to match the profit and loss, have to match the latest two statements on cash flow if you're self-employed. So between those three stringent, tests, is what Fannie Mae and Freddie Mac have put out as, this is what we're going to lend on type of thing. So yeah, like people in California, like there's a lot more self-employed loans that go through
Hmm.
here than I feel like on the East Coast for sure.
And there, because a lot of businesses are closing because of COVID, I wonder if that does affect how things will be done in California and just kind of along the coast.
Yeah, yeah, that's a good question.
I mean, granted, a lot of it's tech, right? So people are still shopping on Amazon. I think we just finished with Prime Day. They're not going anywhere.
Right, right, right. Absolutely.
Yeah. So that, I
Yeah,
mean, we have a lot of that going on the coast, and they're still doing really well.
for sure.
Yeah. I think I just read it yesterday. Dropbox, their employees can work from home permanently. I think Microsoft's doing the same thing. Facebook is. So, I mean, that could also change how things go.
And that's the question of the day too, right? Like how would COVID affect e-commerce, and
Hmm.
working from home? Like for my office, only the loan officers come in. All the supporting staff, the processors, everybody else, they're at home. I literally don't print out anything anymore. We're completely
Yeah.
paperless, and it's easier. It's to transfer files and get
Sure.
the the latest document signed or whatever it may be. Yeah, like it's all through email communication and
Yeah.
chat and all that things. It might
Yeah.
be better.
A- and it'll be interesting, right? Because I mean, that's the commercial space, which maybe I should find someone in the commercial space to interview, because that's really where things are going to get interesting,
For sure.
right? It's like you need that office space. But yeah, I've been working from home pretty much since March, and it took some adjusting, I'll admit. I mean, I finally, as you can see, my background's changed since the last time we spoke, because my wife and I just rearranged our ADU to now I have two monitors, and it's just more complete in terms of setup.
Yeah, and it's funny, like social cues too, right? Like before, if you heard a dog in the background barking, it would have been like a not so professional.
Right, it's super rude. Now it's just cute.
Yeah, yeah. It's just like normal. It's like hearing kids like wailing in the background. It's like,
Oh
oh,
yeah,
that's just part of it. What's going on?
yeah,
It's funny.
yeah, for sure. Is there anything changing as far as just like the lending process?
Yeah, yeah. I mean, so right now, I think what people like don't judge lenders right now on their performance at the moment. So yeah, because capacity is over, I think the latest figure is like 150% capacity, over capacity in terms of loans coming through. I've
Mhm.
seen actually a huge slowdown in the past couple weeks versus
Listen,
like June, July, August, like a huge slowdown in terms of refinances because it seems like that initial wave, like everybody was pushing to get it done. Um, but yeah, the process is a little slower because everybody's at max capacity. All the talent and anybody with mortgage experience is not only trying to get employed or already employed, but poaching is you know occurring between companies as well because there's just not enough experience and talent on free in the marketplace to absorb all the loans going through the system. So I would say the first expectation is expect it to be slower than normal. It's
so 30 days is still doable, but for those that want to do it in 21 days, 25 days, like it can be done. It would just be extremely tough.
right, yeah. And you and I have had this conversation before too,
Yeah.
and a lot of it has to do with the profile of the borrower. If you're one person W-2 800 FICO score and you make a consistent pay stub every month, and the employer picks up the phone and then said was able to verify employment, oh yeah, he's been here for 15 years, he's good, that loan will be fine. But
Right.
if you have like two 1120Ss and three Schedule Cs and you own five different investment properties, that loan's going to take a time, a long time to get through.
And you
You
can't
know?
do anything ahead of time?
Oh no, we do a lot of ahead of time. So what we try on our end to do is gather everything we possibly can in order to anticipate um, what what the underwriters are going to want to see.
Mm,
Um, but there's just certain things that you can't do until you're actually in escrow to speed that process up. So there's a surprise in every single loan. There's always something that comes up, and
sure.
99% of it can be worked around. And it's just like life. Only 10% of the people in your life are 90% of your problem type of thing.
Right.
Same thing with loans. So only 10% of the loans are the problem, and 90% of them will go through fine, um, based upon what you find during the process. But yeah, it's in terms of process, the process itself hasn't changed, but the burden upon the actual inspection of, I mean, I look at bank statements so much more closely than I was ever required to, having to have a lot more conversations with the borrowers in terms of what that line is, what is this credit, what is this debit, and it's not because, trust me, we wouldn't want to do it if we didn't have to. Like, I don't want to have these conversations either, and be
Right.
here till 9 o'clock at night, like going like, why is that huge debit there? you know, it's just something that we have to adjust with the times, and hopefully it goes away after or this is all past us.
Once
So
the new normal.
exactly, yeah. So I wouldn't say the process has changed, but the depth of complexity in terms of scrutiny is a lot higher.
Interesting. Okay. No, and that makes sense, right? There's just more risk at the end of the day.
Absolutely. Yeah, and I think it's you know, to a certain extent, some of it is kind of overboard a little bit, I think. Like,
Hmm.
but at the same time, everybody's trying to do the right thing and trying to protect. You don't want to get a loan if you can't pay it back. That's just
Right.
that's a bad situation, you know.
Yeah.
So making sure that the borrower gets what they're asking for, may, sometimes maybe they might be their own worst enemy. So
Oh yeah. And what I've explained to some clients is like, look, interest rates are below 3%. Like, we had a mutual client that locked in a 2.75% interest rate, and it's like, I wouldn't let someone borrow $1 at that rate. Like, like I wouldn't give anyone that kind of money for that low.
right, right,
And which is, I would imagine, it just ups the risk even more.
right. And I've had people who are refinancing too. They've asked, oh, should I pay the loan off early? And I'm like, no,
It's free money,
it's free money.
practically.
Exactly. If you took the $5,000 you wanted to put into the loan versus putting into the stock market, and your rate of return is conservatively even 4%, you'll be making more money than you'd be saving at the end of the day.
I remember this was 2-ish years ago. I had a high interest savings account, and that was at 2.5%.
Yeah, exactly. Yeah,
I was like, I make as much as the lenders are. And
right.
mine has
Yeah,
no risk, but now
exactly.
it's dropped to like 0.6%. It was ridiculous, but it is what it is.
Absolutely. Yeah, money's cheap nowadays, and it's
It's
got to be.
fascinating.
Yeah, absolutely.
Nice. So those are the questions I have on the lending side. What questions do you have on the real estate side?
So yeah, what are you seeing in terms of, I think the biggest thing for you guys right now is bidding, right?
Yeah.
Multiple bids.
Yeah, it's been fun. I guess. Sure. No, a lot of my clients, most are in bidding wars. So, like for example, one of my clients, she's looking, her and her boyfriend, and we are starting to write blind offers. So what we do is we write the blind offer, then we go see it,
Mm,
just to, because look, it's free to write an offer in California, so there's almost no harm in it. We can always adjust the offer after we see it.
hmm.
But yeah, a lot of stuff's going into multiple offers. You can get creative so far, and I know this is going to change, but knock on wood, so far all my buyers this year have been able to get list price or below.
Yeah, well, that's fantastic,
Yeah.
especially in a seller's market.
Uh-huh. So far so good, but I know that's going to change.
So how are you able to do that?
So there's a couple of ways. I mean, the big thing is you look for aged listings. You look for homes that have been sitting on the market. Like, helped a client buy a townhouse. I think you did a loan on it. It was on the market for 19 days. That's an aged listing as
Right.
far as at the time, as far as condos were concerned. So it's like, I'm like, hey, look, it's been on the market for 19 days. You would have gotten an offer already. So here's one for less. And I need it to be contingent upon my client selling his condo. And the seller took it. There's another one, we're in escrow now, where it took about 2 weeks to massage, but it was new to the market, but it was actually directly below. It was a model match to a unit I just sold in that same building like 2 months prior.
Mm,
So it's just like, look, you're overpriced. Here's why. And it just took massaging, because a lot of sellers, I shouldn't say a lot, some sellers have this idea that, oh, it's a seller's market. I can ask for whatever I want.
right, right.
And it's just like, in some cases, that's not the case. So you have to find them. So they're tough to find, but some are out there. And some of it has to require um, flexibility on the buyer's part, right? Some compromise, right? So like, for example, I'm trying to convince one of my clients to see this house. It doesn't meet all the criteria. It needs a lot of love, but it's been on the market for 90 days. It's
Right.
like, and this is a market where people are writing blind offers. And this one's been on the market for 90 days. It's like, it may not meet all of your criteria, but it's a bird in the hand. No one else is touching it. So let's go after it. So that's some of the stuff we've been doing.
Right. And yeah, what I think is unique about you is, yeah, you're getting super creative in terms of how you present these offers, and like what we alluded to in the beginning about how you're giving three offers at different price points based upon the flexibility of what the conditions are going to be on that contract.
Right.
Yeah, that's nuts. It's something that I haven't really seen. It's very often, but that's great.
Yeah, I mean, you have to get creative, but even on the multiple offer side, I think buyers are just going to have to come to grips with doing the escalation clause. Right.
Yeah.
That's what I did on my house. We were one of 17 offers. We did the escalation clause, $1,500 above any bona fide offer. For most of my clients, they put a cap. We chose not to because I knew it had to appraise.
Right.
But the other thing I'm seeing, which is really unique to this market, is even with multiple offers, not all sellers are giving multiple counter offers. They're just accepting one as is, or they're countering just one offer. That's been very different and very hard to work with because you essentially have to give it your all right from the get-go.
Right.
So like I had a client, we saw a property and like we saw it and we knew we had to write an offer same day. So like, Rick, what should we write an offer for? I said, hey, let's just write at list price. I'll analyze it, but let's at least write at list price so we're in the game. List price. And they didn't even give us a counter because someone
Really?
offered over 40 grand higher. And this is like a 700,000 range, just to put it in perspective. No appraisal contingency. So it's just like, if it appraises, it appraises. If it doesn't, it doesn't. So for a lot of buyers right now, you kind of have to put your best foot forward. If you're trying to be the world's greatest negotiator, don't even bother.
You know what? That actually brings up a really good question that I'd like to ask you because I've never really knew how it works.
Mm-hmm.
So if you're on the listing side and you're getting the 7 different offers about, for your listing,
Mm-hmm.
I have to imagine that's maybe the reason for this. The phenomenon that you're talking about is because it's a lot of work to counter everybody, right?
Yeah, but it's actually important to do it because, for
Right.
example, when I sold a condo in Encino a couple months ago, and we received 4 offers. One of them was decent, but we countered all 4 and said, give us your highest. The second lowest offer ended up coming up above everybody else.
Wow.
Right? So it's like so if you have the 7 offers, or honestly, in some cases, 35, I've seen that. Maybe you counter the top 5, maybe you counter the top 10. Maybe you have a conversation with all of them and say, look, this is where we are. If it's below list, just ignore it.
Right.
So yeah, it's a lot of work. It can be overwhelming for the seller. But my job as the agent is to put my seller in the best position possible. So unless there is an offer that's phenomenal, it's like, no, you want to counter because maybe you can counter with terms that you like. Hey, maybe you need a free rent back. Well, if you only counter one person, they say no, now you're screwed. You counter 5 of them and 2 of them say, yeah, sure, we're game.
Right. And maybe for people who maybe are not sure about, like what you said, it has to appraise.
Yeah.
So unless you're all cash, if you're all cash, it's not a problem.
Right.
But if you got to get a loan, if it doesn't appraise the value, meaning the appraiser doesn't thinks that you're paying more than you should, then the loan could fall through because you have to make up that difference in cash. The buyer does.
Or the seller could reduce the price.
Or the seller could reduce your price, right?
Right.
And the reason for that, for maybe if the question is why is that? Well, the reason for that is to prevent like another '08 crisis. It's to prevent a bubble so large that it appraises, a $1 million home appraises for 1.5 million, and then it compounds because appraisers look at comps, at least 3 different comps of what similar houses, similar size, similar neighborhoods, about what sold in the past couple months prior, and if you have an escalation of prices so much because it's just going over ask, but it's not actually, it shouldn't command that purchase price, then it gets out of control and it's like a wildfire that goes around the country. Was what happened in '08.
And more importantly, in '08, lenders could pick their appraisers.
Exactly. Yeah.
So
yeah. We can't even talk to them.
Yeah, exactly. Right. So back in '08, you go to appraiser A, hey, I need this to appraise for 750. Can you do it? No, I can't do it. Okay, fine. Hey, appraiser B, can you do it? For $1,000, I'll do it. Here you go. And away you go.
It's nuts, right? That was the way it was, and the laws have been put in place. Like they completely make all the sense in the world, and it's nuts to me that it took this long for
Yeah.
those laws to come through. But yeah, like if we have to talk to an appraiser, we can't directly as lenders. We have to go to the appraisal desk. They have to ask for us, and then they come back and tell us. So it's not like it's not an easy process, but for sure, yeah, absolutely. But all these checks and balances are lessons learned in literal hardship of financial crises and people losing their homes and a lot of grief and dismay that occurred. But like I said, I think those reasons are the reasons why we're not seeing crazy foreclosure numbers today.
Hmm.
So it's a bittersweet pill to have, but I think it's completely necessary for sure.
No, I agree.
So let me ask you this question, Rick. Like I said, you don't have a crystal ball, but what do you see coming up for the winter? Has your outlook changed, or what do you think?
Okay, so one of the big things is I always looked at the month supply, like how is inventory? And it actually flatlined over the last couple of months. We're at 3 months. So meaning if for LA County, so if no new homes came to the market, it would only take 3 months for everything to sell. And it's been like that for the last 3 months and actually dropped since May, which I thought
Mm,
I was expecting it to continue to go up. Now, condos, on the other hand, we are seeing an uptick in condos. I actually have 3 condos coming up.
wow, that's
Yeah.
fantastic.
But that also makes sense because everyone's been working from home. Now they're like, crap, I want to get out of my condo and into a house, which good news is there are a lot of first time home buyers who want to buy and can't afford a house. So therefore the condos are coming on the market.
Right, for
Um,
sure.
and we're still seeing that kind of push down from the first quarter where people couldn't buy a house. Like literally we were stalled out on buying houses. So they're now being pushed down. So I think from what we're seeing is like it's still going to be busy. We do have the elections coming up literally in a couple weeks. Um, my hunch is, and I'd love to get your take on it, is like, well, if Trump wins, it's almost business as usual, right? Because he's already been in office for the last 4 years. So now we just keep going. And then if Biden wins, maybe we see an uptick because this is a blue state,
Hmm.
right?
Yeah,
I just don't necessarily see why home prices would drop. I do see maybe a slowdown, like in listings, because you still have that fear, right? Like there's still people I've talked to, and like, you know what, I'm going to put the buying search on hold because of the elections.
right.
And it's like, well, a famous phrase is when there's blood in the streets, that's when you go out there, right? So it's like, yeah, go out now when everyone's scared and buy the place
Right,
because you have less
exactly.
competition. We have a client, mutual client of ours, who bought, was it back in June? It was our VA client. And it was good timing because people were still spooked to buy.
Mhm.
And he had like no competition. I think there was one offer on the table, but that went away. So it's like he got it for below list price. It's a house with an ADU. He's renting out the ADU. Him and his family live in the front. They're living for less than what they were paying in their 1 bedroom apartment
That's
at a
nuts.
phenomenal rate for zero down. It's like, dude, way to knock it out of the park.
Right, right. Yeah, the strategy behind of like what you do in terms of yeah, that you can really make a lot of money off of,
Yeah.
at least have, uh permanent cash flow, just it's great.
Yeah.
Um,
I think now would be a good time to buy. And I've said that since for the last couple of months because I think there are some people that are like wary about the election when historically we have never seen, well, I shouldn't say never because I haven't looked at every election. Historically, generally speaking, there haven't been price reductions during elections,
mhm,
strictly a slowdown, which means there's homes to choose from and there may not be as many buyers.
right.
Now, as of right now, everything's going to multiple offers for most of the lower priced homes. Luxury homes is still slow.
I gotta imagine that for sure, yeah. Yeah, the
So
price point. So what do you find the luxury market at? Is 1.2, 1.5 million?
good question. So probably obviously it depends on location. So yeah, San Fernando Valley, let's call it over 1 million.
Yeah.
And north of like the Sherman Oaks and Encino kind of areas. But yeah, probably north of 1 million would be considered luxury for a lot of the San Fernando Valley. And then you go to the west side, it's really anything over 2 million.
Mhm. Wow, that's nuts.
Yeah, I mean, um, the median price point in LA County, I have it written down. Here you go. So back in July was 702,000 was the median price point. Now we're at 739. So that's an increase of over 5% just in the last couple months.
That's nuts. Yeah.
Yeah. So we'll see. But yeah, I think it's still going to be busy. It's just going to be a matter of, and every market's different, right? The more condensed markets like downtown LA, although condo prices are still expected to go up. I think the Real Deal did a report on that, but because we don't have to be right next to work,
right?
They don't necessarily have to. So like the luxury condo market, that's definitely seen some softness. I've seen some in Marina Del Rey that are just kind of sitting on the market when I'm like, oh, it doesn't seem that unreasonably priced, but why would I spend $1.5 million on a condo in downtown LA when I can go buy a house
for sure
somewhere else?
Yeah, it's nuts how much those little pockets command in terms of purchase prices. Yeah. But I think that's all I got for you, Rick.
Yeah. So yeah, unless there's any questions from the audience, which I do appreciate coming on, and we'll do this again. But yeah, is there any, closing words or closing words of wisdom? Oh, hang on. I think I have a question. Go ahead and type it in just to make it easy. But yeah, the other thing, and I didn't comment on this before, but I have a few clients that are looking at multifamily, like the duplexes and 2 to 4 units. I have been seeing a lot of those have been sitting on the market. I think a lot of it has to do with COVID, because if you have tenants that aren't paying, or you have tenants pricing below market rents, and you can't raise it for 360 days after we're no longer declared a state of emergency, I think so we're seeing some price reductions there and some multifamily struggling. So if you are thinking about buying, those actually might be good opportunities as long as you know those risks, right? Because eventually we're going to get out of this. And when we do get out of this, then you can come out better.
Right.
But I do see tenants, because we're doing a lot more research on it. Let's see. So can I request Rick to write an offer for all the properties that come up on my listing? Don't quite understand, but yeah, if there's a property you like, you can write an offer on any property, for any price with any terms. That's an option. Whether a seller takes it or not, you don't really want to waste your time or the seller's time, or this is kind of on the back end, but you don't really want to waste an agent's time. Like if you have a really good agent, they're not the type that's okay with constantly writing lowball offers if they know they're not going to get accepted, because it burns them out when they have other clients that are willing to write reasonable offers, right? Because on the buying side, it's a free service to clients when they have agents for buying side. So it's like, I don't get paid until the deal closes. So you're better off writing either reasonable offers or creative offers if you're going to go that route. Hopefully.
And then also too, right? You need a pre-approval, just to even go into a home, correct? Nowadays.
Sometimes, yeah. That's actually a really good point. So we are starting to see agents requiring pre-approval. We've done that on some of our listings. Back in when we sold a listing in Ladera Heights, this was back in March, actually. That was something that we required because there was tenants living there. They were super concerned. So we said, look, we're only going to have people that have been pre-approved coming through the home.
Which, honestly, I don't think that's a bad practice at all. Yeah,
I agree.
Not a bad practice.
It's not a bad one.
It's not a bad one.
Yeah, no, not at all. I will say one of the struggles during COVID has been, and for obvious reasons, no open houses.
Right.
Which has always been a struggle because I used to be able to send clients there and I didn't have to be there. Now I have a lot of agents like, nope, you got to be there. And it's like, I can't be at two places at once. So work with me here, especially when, in this market, I have buyers, let's say we see a listing on Monday, like online, like, all right, let's go see it for this weekend. It's like, it could be gone by then. I'll see you tonight. Yeah. See you in a couple hours. That's just how it is. So
that's nuts, man.
Looks like that did answer the question. So awesome. All right. Well, John, thank you so much for our quarterly market update. I really appreciate it.
Oh no, man, you're a wealth of information. I appreciate, you spearheading all this stuff.
For sure, for sure. So we'll talk soon, and I'll talk to you next quarter. I'm
Okay.
sure between then.
I'm sure. Yeah.
I'm sure.
You're like, let me call you right now.
Yeah, right. All right. I'll talk to you guys soon.
All right. See ya.
Thanks. Bye.
Bye.
Hey everyone, hopefully you liked the video. If so, please don't forget to give it a like, maybe show some love in the comments. Also don't forget to subscribe. We do have other videos posted. Please go ahead and watch them, enjoy them. They'll be posted somewhere here. Feel free to click or just view the channel in general. Thank you guys so much. I'll see you next week.